Once again, if you'd like to ask a question, please press star, then 1. Our next question comes from Daryl Hughes of Dow Jones News Wires. Your line is open.
Hey, guys. I actually think while I was punching in star 1 to ask this question, you may have been answering it. But according to previous surveys and other economists and studies, the projection is that by mid-late 2010, the economy will show better signs of recovery. My question is that projection still on target? And also, when do you guys foresee employment figures to begin to grow?
Well, I think we kind of did answer it, so maybe just to say the same thing another way. I think the CEOs are looking at GDP still contracting in 2010, or like for the next 6 months, at about a negative about 9%. So I think what we're saying is it's less worse than it was, but it's still contracting. So for the most part, GDP growth isn't anticipated until the second half of 2010. Now, whether or not that translates, you'll see about an 18-month process. So if this quarter is an indication we're heading in the right direction, then you probably have 12 to 18 months before you'll start to see this filter down to employment increases. If this quarter is just a sort of a false start, then I think you have a different question, and we'll see that at the end of next quarter survey.
Thank you.
Just to clarify, it's 0.9% is the expectation for the decline in GDP for the remainder of 2009.
Once again, if you'd like to ask a question, please press star, then 1. Our next question comes from Robert Willis of Bloomberg News. Your line is open.
Yes. Good morning, Mr. Seidenberg. You're forecasting 0.9 for the full year, but I may be going over some ground because I was in the process of getting my question registered and whatnot, and I was cut off for a second there. But most economists are forecasting that GDP will actually turn positive in the third quarter, and you're saying also that the 44 on your diffusion index it's near the breaking even point of 50. So can you clarify actually what are we looking at? Are we getting near? Are we covering the third quarter or near the beginning of positive growth? Because that 0.9 can be an average it's an average for the full year, and the first half was very weak, but the second half is going to be, to get that average, the second half is likely to see some positive growth, right? Can you clarify that?
Yeah, I don't think I would, I may need some help from John. I don't think I would read this as some cumulative answer to the full year. This was a survey done by people who filled out these forms, given their current view. Last quarter, I think our CEO's projection on GDP growth for the next 6 months going forward was negative 2.1, and now the CEOs are looking at a negative 0.09, which is slightly better, but it's still contracting. So I think all we're really saying is a slight increase in demand has given people the sense that GDP will be less bad than it was last quarter. But it's not necessarily an indication that we're in positive growth yet.
Okay, thank you.
Our next question is from Scott Malone of Reuters. Your line is open.
Hi, one more, and I may be splitting hairs here, but the revenue figure, the forecast of 51% growth, doesn't appear to be specific to the U.S., and obviously the capital spending and job numbers are. Wondering if that kind of speaks to the general theme we've been hearing from most sectors, that as the growth comes, it's going to come first, and more importantly, going to come strongest outside the U.S. and more in the emerging world rather than in the United States and also to a degree Europe.
Okay, that's a good question. I don't know the answer to that. John, do you know the answer? Or is this just overall revenue for the companies?
Ivan, this is overall revenues for the company, and I would say anecdotally, what we're hearing is that there's spotty growth around the world. Obviously, some places where there has been substantial government intervention and stimulus packages like China have had higher growth rates, but there's not a great expectation in Europe, particularly in the big markets Europe and Japan and South America. So this reflects the total company sales.
But to be fair, John, I go out on a little limb and say that I don't think in this case international would be overly weighted in the way the CEOs answer the questions.
They would not be. That's correct.
Okay. Thank you.
Our next question comes from Mark Schoaf of Workforce Management Magazine. Your line is open.
Yes, hi. Thank you for taking my question. I have a question about any structural changes you may be seeing, Mr. Seidenberg. Is there any evidence that companies are making changes in their operations during the downturn so that they don't have to hire as much as they have had to coming out of previous recessions? Are they making productivity gains that are going to make the recovery structurally different than past recoveries?
Well, I think we had a CEO meeting a couple of weeks ago, and we were all talking about these things. I think all of us are probably doing similar things, which is given that we have a downturn, we're all looking at our balance sheets, we're looking at our basically our factories, we're looking at our costs. So I think everybody is taking the steps necessary to be more efficient and better prepared as we move forward, and given that it may take another 12 to 18 months to make that happen. So the answer to your question, short answer is yes. I think all the companies, particularly in the BRT, are naturally doing all the things to improve competitiveness and increase productivity in anticipation of further expansion. Now, let me just answer the last piece of it. It doesn't mean it's in lieu of hiring people. What it means is that it's developing new products, thinking about new ways of serving the market. So I think the goal is to hire people and to grow, but the issue is everybody wants to be state-of-the-art as that happens, as the economy changes.
Thank you.
Just thank you, and you can close it off.
Okay, everyone. Thank you very much. Appreciate your time this morning, and thank you, and we'll be back again next quarter.
This concludes Business Roundtable's briefing on the third quarter 2009 CEO Economic Outlook Survey. A transcript of this call will be available tomorrow. Please visit www.businessroundtable.org/CEO_survey for more information. Thank you.